Hello and welcome to the channel Contract Simplified. I am Kritika here with a new video all about buy-side contract and sell-side contract with examples of payment clause and indemnification clause. Contracts are divided into several types on different parameters or perspectives. One such differentiation is buy-side contract and sell-side contract. The differentiation is done based on perspective of the contract, that is buyer or seller. Buy-side contracts are agreements where the focus is on purchasing goods or services or assets. These contracts are critical in ensuring that the buyer receives what they pay for under the terms they find favorable. Sell-side contracts are agreements where the focus is on selling of goods, services, or assets. These contracts protect the seller's interest, ensuring they receive proper compensation and outlining their obligation. Buy-side contract shall focus on cost reduction, wherein sell-side contract on revenue generation. Consider a financial institution, the buyer looking to procure a custom software solution from a software development company, the seller. This single transaction involves both buy-side and sell-side contract, each protecting the interest of their respective parties. The financial institution's buy-side contract, designed from the financial institution's viewpoint, and focuses on ensuring they receive a high quality software solution under favorable terms, wherein the software development company's sell side contract aims to protect their interest, ensuring they receive proper compensation, managing risk, and outlining their obligation. From the financial institution's buy side perspective of fees and payments clause, the fees clause would outline the payment structure for the software development services. It would specify the fees payable for different stages of project, such as initial development, testing, implementation, and ongoing maintenance. The buyer would negotiate to ensure transparency in fee calculation and clarity on any additional costs or expenses. Conversely, from the software development company's sell-side perspective, fees and payment clause, the fee clause would specify the rates and terms under which the fees are charged for their services. They would outline invoicing procedures, payment schedules, and any penalties for late payments to protect their financial interest. In general perspective, let's review how buy side and sell side would review or draft an indemnification clause. Buy-side perspective will focus on ensuring the clause covers a broad range of potential risk and losses that could arise from the transaction, including third-party claims and consequential damages. Wherein sell side would seek to limit the scope of indemnification to reasonably foresee risk and avoiding broad indemnity obligation that could expose them to excessive liability. Buy-side perspective will focus on checking for exclusion that might limit the indemnitor's liability, such as crave-outs for certain type of misconduct or breaches. The buy-side will seek to minimize these exclusions to maximize their protection, wherein sell-side would crave out to exclude liability for matters outside their control or for losses caused by buyer's action or negligence. Buyer side perspective will focus on evaluating any caps on the amount of indemnification or limits on the duration within which claims can be made, and negotiating to ensure that these are reasonable and adequate for potential risks. Wherein sell side would limit the amount and duration of indemnification obligations to manage financial exposure, particularly for uncertain or long tail risks. Both buy side and sell side would verify that the clause specifies clear procedures for notifying the indemnitor of a claim, as well as provisions for the indemnitor to take over the defense of claim if necessary. Assessing the indemnitor's ability to fulfill their indemnification obligation, often by checking if they have sufficient insurance coverage for or financial resources. Negotiating terms such as trigger events or indemnification, the standard care required, and procedures for setting claims to ensure they are fair and balanced. Understanding the nuances of buy side and sell side contracts is essential for any professional involved in procurement or sales. By mastering these agreements, one can ensure that organizations' interests are protected and that transactions are conducted smoothly and effectively. If you have any questions or require additional information, please feel free to reach out to us at 9945 893415 via WhatsApp only. Please do not directly call or send text messages, please do contact only via WhatsApp. And here is a link for the subscription. You will be notified about new article or any new updates via WhatsApp as well as email. I have posted the link in the description. You can register from the same link. And thank you for watching this video up to end. And please do not forget to like, share, and subscribe to the channel Contract Simplified. Soon I'll be meeting you with another informative video.